This isn't a trade. It is a commitment to our long-term vision. These are not the words of a typical Wall Street trader flipping assets for a quick profit. These are the words of a creator, an architect of the future, spoken as his company completes a move so audacious, so significant, that it has sent shockwaves through the entire cryptocurrency world. We are talking about a single entity becoming the largest public holder of Ethereum on the planet. What is truly happening behind the scenes of this financial earthquake? Today, we are pulling back the curtain on a story that is far more than just a big purchase. This is a story about conviction, strategy, and a bold vision for the future of money itself. We will dissect how one of Ethereum's own co-founders is now orchestrating a master plan. We'll investigate the monumental sums of money involved, explore the secret door deal struck directly with the Ethereum Foundation, and uncover the profound philosophy driving them to lock away hundreds of millions of dollars in ETH, potentially forever. And most importantly, we will ask, what does this corporate power play mean for the future price of Ethereum and for every single person who believes in the promise of a decentralized world? Get ready, because the rules of the game are being rewritten right before our eyes. To understand the gravity of this event, you first need to understand the man at the center of it all, Joseph Lubin. This isn't just any tech executive. Lubin is royalty in the crypto space. He is one of the original co-founders of Ethereum, one of the 8 key figures who gathered in a house in Switzerland in 2014 to launch the project. He stood alongside Vitalik Buterin, Gavin Wood, and Charles Hoskinson in the early days, helping to build the foundation of what has become a multi-hundred-billion-dollar ecosystem. After the initial launch, while others focused on different paths, Lubin founded Consensus, a veritable titan in the blockchain software world. Consensus is the company behind essential Ethereum infrastructure like MetaMask and Infura, tools used by millions of developers and users every single day. He is a builder, an ecosystem architect, so when Lubin, now also the chairman of a public company called SharpLink Gaming, makes a move, it's not an outsider placing a bet. It's an insider executing a calculated, long-term strategic maneuver. And it is this company, SharpLink, that is now at the heart of this unfolding saga. Now, the name SharpLink Gaming might throw you off. A gaming company? What business does it have making 9-figure bets on cryptocurrency? This is precisely where the story gets fascinating, because this isn't about funding the development of the next big video game in the traditional sense. This is about a fundamental, strategic alignment with the core principles of Web3, the next generation of the internet. In the Web3 vision, the worlds of gaming, finance, and digital identity are all destined to merge on decentralized platforms like Ethereum. Think about it. True ownership of in-game items as non-fungible tokens, or NFTs, that you can buy, sell, or even use across different games. Think about play-to-earn economies, where players are rewarded with real, tangible value for their time and skill. This entire future is built on Ethereum. Lubin's presence as chairman is the ultimate tell. His involvement transforms SharpLink from just another company into a vessel for this much grander strategic vision. He is using this public company as a vehicle to make a profound statement, one that echoes his deep-seated belief in the network he helped create. By positioning a gaming company to be a massive holder of ETH, he's creating a powerful synergy. The company is not just financially invested. Its very operational future is intertwined with the health and success of the Ethereum network. It's a move that says, we built it, we believe in it, and now we are putting our corporate treasury where our mouth is, on a scale no one has ever seen before. So let's talk about the move itself. The headline that caught everyone's attention was the latest purchase, 10,000 ETH, acquired for a cool $25.7 million. A significant sum for any company, but this was merely the cherry on top of an already colossal cake. This single purchase came after SharpLink had already executed a massive buy of over 176,000 ETH back in June. Let that sink in. We're talking about a total holding now approaching 200,000 Ether.
To put that into perspective, the total amount of ETH required to become a validator and help secure the network is 32 ETH. SharpLink's holdings represent the equivalent of thousands of individual validators. In a world where owning just one validator node is a significant investment for an individual, SharpLink's hoard is simply breathtaking.
They are, without any ambiguity, the largest public company ETH holder on the globe, dwarfing the holdings of other public firms that have dabbled in crypto. But the numbers, as staggering as they are, don't even tell the most interesting part of the story. The real intrigue lies in how this purchase was made. SharpLink didn't just go onto an open exchange like Coinbase or Kraken and start buying.
That would have been too simple, too disruptive, and it would have sent the market into a frenzy. Instead, this transaction for 10,000 ETH was a direct deal, a private, over-the-counter purchase straight from the coffers of the Ethereum Foundation itself. This is the equivalent of the United States Treasury deciding to sell a massive tranche of its gold reserves directly to a single, trusted corporation, bypassing all public markets.
A deal of this nature is almost unheard of and speaks volumes. It suggests a level of trust, a deep strategic alignment, and an institutional collaboration that goes far beyond a simple transaction. It implies that the Ethereum Foundation, the nonprofit entity dedicated to stewarding the Ethereum protocol, has essentially vetted and approved SharpLink and Joseph Lubin not just as an investor, but as a strategic partner, a long-term custodian of the network's future.
The average price paid was $2,572 per ETH. At the time of this news, Ethereum was already trading near $2,985. Meaning SharpLink is sitting on millions in unrealized gains from this deal alone. But as we're about to see, cashing in is the last thing on their mind. This is where we move from finance to philosophy.
What is SharpLink doing with this digital treasure chest worth hundreds of millions of dollars? The answer is the key to this entire strategy: staking. Over 95% of SharpLink's massive Ethereum holdings are not sitting idly in a wallet. They are staked. For anyone new to the concept, staking is the process of actively participating in transaction validation on a proof-of-stake blockchain like Ethereum. It is the modern, energy-efficient alternative to the proof-of-work mining that secures Bitcoin. Instead of solving complex puzzles with powerful computers, stakers lock up their ETH as collateral to vouch for the validity of new transactions. In simple terms, you lock up your capital to help secure the network, and in return, you receive rewards, much like earning interest in a savings account.
SharpLink is earning a yield of between 4 and 6% annually on its staked assets. While that is a handsome return, the real purpose here is far more profound than just generating passive income. This is a deliberate act of removing a vast quantity of ETH from the liquid circulating supply. Every single one of those roughly 190,000 staked ETH is taken off the market. It cannot be easily sold. It cannot be instantly traded.
It is committed to the long-term health and security of the Ethereum network. This is the practical application of Lubin's statement. We are removing ETH from circulation, staking it, and aligning our mission with Ethereum's push for decentralization and sustainable finance. Think about the powerful economic implications. It's a textbook case of a supply shock. When a huge portion of an asset's supply is locked away and taken off the market, and demand remains constant or increases, the price of the remaining available asset has a natural tendency to rise. This isn't market manipulation. It is a long-term economic strategy born out of conviction. SharpLink is not just betting on the price of Ethereum to go up. They are actively contributing to the structural conditions that make that outcome more likely, all while strengthening the very fabric of the network itself. The implications of this are massive, and if you're starting to see the bigger picture here, show some support by hitting that like button. It really helps us dig deeper into stories like this.
This entire operation transcends the normal rules of corporate treasury management. It's a mission. Joseph Lubin is making it clear that SharpLink's approach should be seen as a new blueprint, a model for other mission-driven institutions. This is a call to action for other companies, foundations, and decentralized autonomous organizations, or DAOs, who believe in the promise of blockchain. He is challenging them to move beyond speculation and become active participants in the ecosystems they support. He is challenging the status quo. The old way was for institutions to dip their toes in, buying a bit of crypto as a speculative hedge against inflation, treating it like a volatile tech stock ready to sell at the first line of trouble. The new way, the Lubin SharpLink model, is to go all in. It's to buy and stake. It's to become part of the network's security apparatus. It's to commit capital not for a quarterly return, but for a generational shift towards decentralization. But wait, some might ask, doesn't one company holding this much ETH and staking it lead to centralization, the very thing crypto's supposed to fight against? It's a valid question, but it misses the nuance of Lubin's play. By making this move so publicly and framing it as a model to be followed, he is not seeking to be the sole king of the staking hill. Instead, he is inviting others to join him. The goal is to encourage a diverse ecosystem of large, long-term, mission-aligned institutional stakers. A future with 100 different companies like SharpLink staking is far more decentralized and robust than one where staking is dominated by a few anonymous, profit-maximizing exchanges or pools. Lubin is essentially demonstrating how a public, for-profit company can operate in a way that is symbiotically beneficial to a decentralized public good. He's showing that you can pursue profit while simultaneously reinforcing the foundational principles of the ecosystem you operate in. This isn't about short-term gains. It's about ensuring the long-term viability and success of Ethereum, from which all other value will ultimately be derived. So why should the average person, the small-time investor, or the crypto enthusiast care? Firstly, the ripple effects are already being felt. The news of this purchase coincided with a significant price surge for ETH, which jumped nearly 8% in just 24 hours. This demonstrates the immediate market impact that such a large, strategic removal of supply can have.
Secondly, and more importantly, this institutional-grade commitment massively enhances the security of the network for everyone. Every dollar you have in DeFi, every NFT you own, every transaction you make on Ethereum becomes more secure when powerful, long-term oriented players like SharpLink are helping to validate the chain. They are, in effect, providing a powerful layer of institutional security that benefits every single user.
This is a powerful vote of confidence that can contribute to sustained positive momentum. But the real impact is far more long-term. Consider Lubin's hope that this becomes a model for others. What happens if 10, 20, or 100 other institutions follow SharpLink's lead? What if major corporations begin to see holding and staking ETH not as speculation, but as a core strategic imperative for participating in the future digital economy?
We could witness an institutional-led supply shock on a scale never before seen. A massive, ongoing drain of ETH from the open market into long-term staking contracts. This could fundamentally revalue Ethereum, not just as a currency, but as the foundational commodity of Web3, the digital oil that powers the decentralized internet. For the individual investor, this could mean that the asset they hold is becoming increasingly scarce and institutionally desirable.
It also signals a maturing of the market, where holding is no longer just a retail meme, but a sophisticated, institutional-grade strategy. We're going to be tracking how this new institutional model plays out for Ethereum and the entire crypto space. To make sure you don't miss our future updates and deep dives, hit that subscribe button and join our community. So, let's bring it all together. The story of SharpLink Gaming and its colossal ETH acquisition is not just another headline. It is a defining moment. It represents a paradigm shift, orchestrated by one of Ethereum's own founding fathers. This is not a trade, it's a testament. It's a strategic removal of supply, a long-term commitment to network security through staking, and a direct partnership with the Ethereum Foundation itself. It is a philosophical statement about the power of decentralization and a practical blueprint for how mission-driven institutions can build, rather than just bet on, the future. SharpLink is not just holding Ethereum, it is fortifying it, signaling to the world that the most profound value lies not in trading the asset,
but in becoming part of the network. The real question this leaves us with is a monumental one. Is this the inflection point we've been waiting for?
Is this the moment Ethereum finally sheds its skin of pure speculation and solidifies its identity as the foundational, indispensable settlement layer of a new global digital economy? One thing is for certain: the game has profoundly changed.